Every single day you are bombarded by a fire hose of financial information. Market is up. Market is down. This expert says buy, that expert says sell. It feels like you need to be constantly connected just to keep up. But what if I told you that this entire ecosystem is not designed to make you wealthier? In fact, its primary purpose is to do the opposite. It's engineered to trigger your most primal emotions, fear and greed. Why? Because an emotional investor is a reactive investor. And a reactive investor makes more trades, generates more fees, and consumes more content. You are the product, not the client. Your attention is what they are selling. The most successful professionals on the planet, people who build complex systems for a living, somehow fall into this trap. They apply immense intellectual rigor to their careers, but when it comes to their own capital, they become passive consumers of financial entertainment. This is the single biggest leak in their wealth-building machine. Think about it. In your profession, would you make a critical decision based on a sensational headline or a random comment online? Never. You would rely on first principles, data, and a proven framework. The great deception is convincing you that your finances should be managed any differently, that your life's capital should be guided by noise instead of a signal. The truth is, the top 1% of investors do not consume information the way you do. They are not consumers at all. They are filters. They have a system, an operating system, that ruthlessly discards 99% of incoming data as irrelevant noise, allowing them to focus only on the signal. This system is their most valuable asset, and it's not complicated, it's just disciplined. And in this video, I am going to give you the complete blueprint for that system. We are going to shift you from being a consumer to being the CEO of your own financial future. Welcome to the CEO mindset. The first rule of being the CEO of your finances is that you don't take orders from the news department. You set the strategy. This means you need your own framework for making decisions, completely independent of the daily chatter. This framework is your financial operating system, or what I call your financial OS. Your financial OS has one primary directive: to maximize the signal-to-noise ratio in your financial life. It automates as much as possible. It simplifies your decision-making, and most importantly, it protects you from your own worst enemy: emotional impulses. It's the constitution for your capital, the set of rules that govern every action you take, or, more often, the actions you don't take. This OS is built on 3 core pillars. Get these 3 right, and everything else becomes secondary. Pillar 1 is your macro dashboard. This is how you see the entire playing field from 10,000 feet. Instead of getting lost in the weeds, it's your strategic intelligence. Pillar 2 is your all-weather architecture. This is the design of your investment portfolio. It is not a collection of hot stocks. It is an engineered structure designed to withstand various economic seasons without needing constant, panicked adjustments. It is built for resilience, not for speculation. This is your core asset structure. And Pillar 3 is your automation protocol. This is the set of habits and automated financial flows that execute your strategy flawlessly in the background. It puts your contributions, rebalancing, and savings on autopilot, freeing up your time and mental energy for what you do best. This is your execution engine. These 3 pillars work together to create a seamless system that filters noise, defines structure, and automates execution. It's the exact opposite of what most people do. So let's stop talking theory and start building the first pillar right now, your personal macro dashboard. You'll be shocked at how simple it is. Let's build your macro dashboard. Its purpose is to answer one question: what is the current economic season? Is it a time of growth and stability, or a time of inflation and contraction? You don't need to predict the future. You just need to understand the present environment to correctly position your assets. You can do this with just a few key data points. The first metric is the direction of interest rates, specifically the federal funds rate. You don't need to be an economist. Just know this: when rates are going up, borrowing gets more expensive, which tends to slow down the economy. When rates are going down, it gets cheaper, which tends to stimulate it. This is the gas pedal and the brake for the entire economy. The second metric is the inflation rate, like the Consumer Price Index. Is the cost of living rising quickly, or is it stable? High inflation erodes the value of your cash and can force central banks to raise interest rates. This tells you how fast the purchasing power of your dollar is changing. It's a fundamental force you cannot ignore. The third metric is broad market valuation. You can use something simple like the S&P 500's price-to-earnings ratio compared to its historical average. Are stocks, in general, historically cheap or expensive? This isn't about timing the market. It's about managing risk. When valuations are sky high, it's a signal to be more cautious, not more aggressive. That's it. Interest rates, inflation, and market valuation, you can check these once a quarter. By tracking just these three things, you can filter out 99% of the daily news about jobless claims, factory orders, or what some CEO said on a conference call. You are focusing on the major tectonic plates of the economy, not the little tremors that create all the noise. This dashboard gives you strategic context. It doesn't tell you exactly what to buy or sell. Instead, it informs the strategy for the design of your portfolio. So now that you have your high-level intelligence, how do you use it to build an investment structure that can survive and even thrive in any of these economic seasons? Now we move to Pillar 2, your all-weather architecture. Most people's portfolios are not architectures, they're scrapbooks. A random collection of stocks they heard about, a mutual fund from work, maybe some crypto they bought on a whim. It has no cohesive design. An architecture, on the other hand, is designed with intent from the top down. The core principle here is diversification across asset classes that behave differently in different economic seasons. We're not just talking about owning different stocks. We are talking about owning different types of assets entirely. This is how Ray Dalio built his famous all-weather portfolio. The goal isn't to pick the winner each year. It's to build a team that performs well on average in any environment. Your architecture should have a strategic allocation that you set once and rarely change. For example, a simple starting point could be 60% in global equities for growth, 30% in government bonds for stability, and 10% in real assets like gold or real estate for inflation protection. The exact percentages depend on your risk tolerance, but the principle is what matters. This is where your macro dashboard comes in. If your dashboard shows extremely high market valuations and rising interest rates, you don't panic sell everything. Instead, when you rebalance your portfolio, you might trim some of your equities that have grown and reallocate to bonds or cash. It's a disciplined, systematic adjustment, not an emotional reaction driven by a news headline. The beauty of this architectural approach is that it forces you to behave correctly. It forces you to sell what's high and buy what's low during rebalancing. This is the opposite of what most people do, who chase performance by buying what's already gone up and selling what's gone down. Your structure imposes discipline when your emotions would otherwise betray you. So you have your intelligence from the dashboard and a resilient structure from your architecture. The system is designed, but the best design in the world is useless without execution. So how do we ensure this system runs flawlessly, month after month, without requiring your constant attention? That brings us to our final, crucial pillar. Finally, we install Pillar 3, the automation protocol. A successful professional's most valuable asset is their time and mental energy. The goal of this pillar is to protect that asset by putting your entire financial operating system on autopilot. The best system is one that you don't have to think about every day. Willpower is a finite resource. Systems are not. The first step is automating your contributions. Set up an automatic transfer from your checking account to your investment account every single month or with every paycheck. This is non-negotiable. This turns you into a systematic investor overnight. You are buying assets consistently, regardless of what the market is doing, a strategy known as dollar-cost averaging. The second step is automating your rebalancing. Many modern brokerage platforms allow you to set your target asset allocation, like our 60-30-10 example, and they will automatically rebalance the portfolio for you periodically. If they don't, Set a recurring calendar appointment for every 6 months to do it yourself. It should be a boring, mechanical task, not a strategic session. The third and most important part of the protocol is an information diet. Unsubscribe from market newsletters. Delete the stock tracking app from your phone's home screen. Make a rule that you only check your portfolio's performance once a quarter. This is the hardest part for most people, but it's the key to letting the system do its work without your interference. By automating your contributions, rebalancing, and information intake, you have built a machine. Your macro dashboard provides strategic oversight. Your all-weather architecture provides the resilient structure. And your automation protocol ensures flawless execution. You have successfully filtered the noise and built a system that grows your wealth in the background, freeing you to focus on your career, your family, and your life. You now have the complete framework. You are no longer a consumer of financial noise. You are the CEO. Your task now is not to find the next hot tip, but to take this blueprint and begin construction. Start by defining your macro dashboard and writing down your desired portfolio architecture. Take the first step today to build the system that will serve you for decades to come.